What's going on, everybody? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. Taking some time out of our family vacation here to check in you with this weekend. I just want to give an overview, a really good perspective of where we are. And that's starting off, we are now in the middle of August. The next 2 weeks coming up, right? This is generally where you see a lot of very low volatility. Now, I do know that we've seen this summer really good trading conditions, really nice volatility. I see that everyone continues to profit, and I like that. And I know then that the question then becomes, well, if the summer has been so good, will the next 2 weeks continue to be as such? Listen, every single summer that question comes up, and generally speaking, the answer is no. This is actually a good time to kind of step away, focus on yourself, focus on things that are going to help you start in a couple of weeks, really perform better. And if that means taking a break from the markets right now for a week or two, that's generally a really positive move that you could bring into your trading. Let's take a look together. I'm going to start here with the S&P 500. You can see that we are consolidating right now right below all-time highs, right? Between this area of here of support now coming in at 33.40 and then the all-time high over there around 33.91. More than that, if I step back, I'm going to step back to give you a really just clean perspective. This is the channel that we've been focusing on, right? Going back all the way to the end of March. And as long as we're above this trend line, buyers are in super control. Technically, this is uber bullish. What's happening now is you can see that this past week we've come up and we've tested the outer bound, the trend line resistance over here twice, which also coincided with that horizontal resistance at 33.91. All right, but now I see price consolidating right below all-time highs on the S&P 500. It really does look like that she's getting ready to go on to make new all-time highs over here. As I step back to the 3-day, just to give you a little bit of a perspective, here we were prior to the crisis in February, and you can see we're just knocking on that door right now. Now, here's the thing. Equities still remain very risky. This is really not where you want to be participating, whether it's the NASDAQ, the S&P. There are absolutely better places to put your capital to work. We've seen that whether it's through FX, which continues to trade really, really well. And we're going to get into that in a moment because the trends remain weak dollar, weak Japanese yen. We're going to get into that. But first, what I want to talk about here is on the equity markets and just trying to get everyone always on the right side of these trends. And it remains that equity markets, they're not attractive compared to what's going on in cryptocurrency, whether it's Bitcoin, Ethereum, and the few altcoins that we've been tracking, or whether it's gold and silver. All right. So just want everyone to be aware of what's going on. Nevertheless, trade accordingly. Speaking of which, let's take a look at what's going on with the dollar. And you can see that we continue to consolidate. This is my first time looking at charts almost all week. All right. This is my first time looking at charts all week. So as I'm going through this analysis, I don't really have that normal flow. Normally I have the pulse of the markets. Before I start trading again, I'm going to do a few days of really just having that posture of just being open to see what's going on, no rush, and just slowly get back into having that feel. It's very, very important. All right, here I can see that we're still consolidating on the dollar index. However, selling off of this resistance now 3 times. This level over here at 90, let's call it 94, okay? Over at 94 continues to hold. We've had 3 touches now in the past couple of weeks, and each time continue to be rejected. I'm going to go ahead and just give you a visual aid of what's going on over here. Obviously we're looking for further weakness here on the dollar. At the first sign of seeing any type of trend reversal, I will definitely bring that to your attention. Everyone saw that this week when we had that really large sell-off in the precious metals, right, in gold and silver, that I released the video to you, even though we were on vacation. It's very important to update all of you to really, make sure if anything out of the ordinary happens, I'm always going to be there. That's for sure. Right now, for reversals on the dollar, we have this trend line. I'm just going to highlight it over there. A break of that trend line here, that would also probably be coincided with a break of 94. That would set us no longer with that really strong, weak dollar posture, and we would be looking for some type of retrace. Whether we came into the first trend line, I will pull back in a second to show you that, or maybe even to this one up here, that's what we'd be watching for. But this counter trend move, because the trend is down, and if we broke up, it would be a counter trend move. That counter trend move would be not long lasting. We would expect that to be sold. So we'd be looking for the spots where we'd be looking for that to end. Here, I'm going to just step back so you could see that trend line that I'm talking about. That was a major technical break on the dollar. Now, we have not even really come up and retested that broken support and confirmed it as resistance. The dollar remains so weak that all it's doing is continuing to consolidate and possibly looking to push another leg lower. Now, if we do break that trend line that I was just highlighting for you, this trend line over here, if we break that trend line, that's going to be coinciding with a break of 94. At that point, we'll be looking for a test of this trend line over here, right? It might coincide with that strong resistance now we have at 95. And if both of those broke, then we still have this trend line over here to worry about. That would be coinciding up here with 96.40. Now, we're not going to focus on either one of those things until this trend line breaks. If and when this trend line breaks, we'll focus in on what that counter trend move is. We're not looking to take the counter trend move with the dollar. We'll be looking and waiting until we come into resistance to position ourselves against the dollar again. Let's take a look at gold. Gold is trading very healthy. We saw that large sell-off. And as soon as we broke, the all-time high was 1906. Right over here, you could see that line of support right now. Once we broke through there, we took out a bunch of stops, and that really accelerated the move down. That's when I released the video, and I said, listen, we're into some support over here. We're looking to buy supports. This is the opportunity that everyone had been waiting for. I hope that it helped bring just some, let's say, I don't want to say clarity, perhaps just some calmness to what was going on that day, because there were a lot of emotions running wild. Now, this looks very healthy as long as we maintain above the all-time high there, the last all-time high of 1907, 1906. This looks really, really good. It held. Now we pull back. Any extension out of this, right? We have a little bit of local resistance coming all the way up to 1980. If we're able to clear 1980, the next move is going to be a test over here, somewhere around 2045. So gold and silver look really healthy. Everyone is aware that it was posted on Friday that Warren Buffett has finally gone ahead and joined the rest of the crowd. He has purchased over $500 million of Barrick gold, getting into the game. Listen, you want to be early. Uncle Warren, clearly not early here as gold trades at all-time highs. But I really, what do you say? I really appreciate the fact that, listen, he was very outspoken against gold, even calling it like what, a pet rock or something like that. And now he realized he was obviously on the wrong side of the trade. He's now on the right side of the trade. That's nice to see. We like to be ahead of the game over here. We like to be ahead. I was texting my family, showing them all of the pension funds that are now invested into Bitcoin. Yep, through MicroStrategy, a lot of these pension funds are owning Bitcoin. We are early on that, and we want to always be early on these trends. Here's a look at silver. Silver's looking very, very good over here. Again, we saw that large pullback into this area of support over here, this 2450, right? And that was the level we were looking at, going ahead to buy off of support. And now we see a pullback and a test of that last local support. Again, a resumption out is going to take us back, and we'll take a look perhaps at 29.50 once again. Now, listen, gold and silver were both coming up really hard and really fast. The pullback we saw was extraordinarily healthy, was really, really healthy. You can't expect silver just to go ahead and shoot the moon without any type of pullbacks in these current circumstances, these current trends where we just entered and confirmed the bull market, gold hitting new all-time highs, silver, precious metals, bull market. We're not going to see this trend is going to be going on. I don't know for how long. I don't know whether it's for 2 years or longer, but we're looking for an extended trend here in precious metals. You're looking for these opportunities. When these opportunities come, you have to already be prepared. Your mind cannot go into fear mode. Your mind has to be like, all right, I've been waiting and looking for the pullback. Here it is. Let me look where the support is. Let's watch how price reacts off of there. You all know what to do. You all know how to protect yourselves, right? You wait for the test of support. You see if it holds. And then if it resumes off, that's the high probability trade to position it. It doesn't mean every trade is going to work out. That's not how it works. That's not what we're looking for. By the way, the results I'm seeing for all those involved in the Conquering the Markets group in the trading course are absolutely phenomenal. I am so proud, so impressed, and really, I mean, to be able to share that with my wife and my family, you have no idea the joy it brings me. Let's take a look here at Bitcoin. And when I say that equity markets are risky, that does not mean that I do not think that equity markets are going to continue to make new all-time highs. Now, I've put out there several weeks ago, so such numbers on the S&P as 4,100, right? But it doesn't mean that precious metals, Bitcoin, they remain stronger, less risky investments. I know that's very difficult for people, especially over in the US, to kind of wrap their minds. Now, not those that participate with us, of course. Those that we have this beautiful, beautiful community, right? Like-minded people who really understand what sound money is. I'm talking about the general consciousness of those in the States. They're generally towards equities. They have, whether it's their personal portfolio and all of their retirements tied up mostly into equities, some into bonds. They think that that's safe. That's really risky in this environment. You want to be going where the sound money is. That's why we're so focused on gold and Bitcoin. Here's Bitcoin. Let's drop back for a second. Let's look at what's going on over here. And I'm not going to get into this video. When I come back, when I start, come back from vacation and start doing the regular live streams and videos with you, I will focus in on where this prime trend line came from and how we cloned it. Most of you are aware for these other levels. And you can see that we are consolidating here nicely ever since we started the bull market. So this was the break of this trend line over here that was going back, connecting the all-time high, and then connecting the all-time high, and then connecting the June 2019 high. Once we broke there, that set off the bull market. And since we came into the first area of resistance and have been consolidating beautifully, this is very healthy. This is extraordinarily healthy. This is setting up for some next legs up on Bitcoin. And, possibly we see it as soon as this weekend. Once we take out this trend line over here, which is coming in today, this weekend, let's call it at 12,300, round up a little bit, 12,300. That's the safe area. Once we clear above that, then we'll be targeting our next area coming in about 1,300 or $13,250. That's what we're looking for. Let's take a look at what's going on with Ethereum, which has also had a really nice move yesterday. I posted to the Conquering the Markets Telegram group when we had gone ahead and pulled back into this area of support. I'm not sure. We're on vacation with all the kids. I'm not sure if it was this one or this one, but I took a photo and I showed everyone we had pulled back into support and now we're resuming off of it, just highlighting the fact that's what you're looking for. A lot of people were very nervous. So that was when we saw that sell-off in the precious metals as well. We saw also crypto sell off a little bit, but notice Bitcoin did not come off too hard as the precious metals did. Very bullish. You did see, and again, that's what you're looking for. You're looking for those pullbacks in these bull markets to support. Once Ethereum cleared $360, it started its bull market. That was a 2-year consolidation period. that it was holding that line at $360. There was the support broken. It then became resistance. Here you can see now after that finally broke, we've since pulled back. We've confirmed that broken resistance as support and have resumed off of it. There's not too much in the way on the upside anymore. We have over here, you have at $508 a little bit of resistance. It's not such a big level. Once we clear that, there's really nothing in the way all the way up until $800. So Ethereum also trading really, really beautiful. And that's why I've been trying to pull everyone's focus away from the equity markets and try to get them now as Bitcoin, Ethereum have entered their bull markets, try to get them focused where the better opportunity is. We see that also continuing in the precious metals, gold and silver. I'm not going to really highlight it right now. Just talk about it for a brief second here. Chainlink, one of the two altcoins that I told everyone that I was positioning into. You could see that. Since we went ahead and started positioning into, we're up over 3x on that. So that's pretty nice. It's come up pretty hard and pretty quick. So it's had a pretty good month. Whether or not it's time to begin or think about taking some profit soon, I'm not really sure. I'll focus on that when I come back. Same thing here with Tezos has gone off to new all-time highs now. And since you can see here, I'm going to go ahead. I don't know what that is. I'm going to come back over here really quick. Where my mouse is right now, this was the all-time high coming in at $3.95. Now I'm going to come down to the 8-hour. And that 395, you can see after making the all-time high, we came back, tested that, broken resistance, held it as support, resumed up, came back down again, and you can see that now is holding as support, resuming off there. Beautiful to watch, beautiful to see. Let's take a look together at some Bloomberg charts. Before we do that, I did take a position this week here. I took it on the Euro US dollar, as it was, again, holding this trend line over here. Let me go ahead and highlight that for you. This trend line over here, that's a 12-year trend line going back all the way to 2008. It's a big deal. I just showed you earlier on the DXY, the inverse, right, trend lines that we were looking at. And you could see this trend line going back all the way to 2008. Why we're above it, any pullbacks into that support and resumption off, that's interesting for me. If we're able to make a new leg down on the DXY and you see we get past this resistance over here, the euro has really, really room to push. The euro, by the way, has record positions long on the euro. I forget how many contracts. I do believe it's 200,000 contracts long the euro. I don't think it's a crowded trade. I think it's the right trade. It's not really about the euro so much as it is about the dollar. It's been a dollar story and continues to be a dollar story. Let's take a look at some of those Bloomberg charts. We're going to start off with the dollar index over here. This is the Bloomberg dollar index weighted differently over here. You could see actually over here, this is going ahead and looks like it's ready to make another leg down. If that is able to go ahead and do that early next week, the next test is going to be over here, 1172, the next area of support. We could see that next leg we were talking about on the DXY, and that would obviously equate to a leg up on the Euro US dollar. What's neat about the Euro US dollar, your risk is really well defined. Trade back below that 12-year trend line, and it's just time to get neutral and wait for when we position long again. Here you can see Ethereum having a really exceptional week. Look at this, constantly bid up on Ethereum. So Ethereum is becoming a little bit similar to Bitcoin in the one aspect that Bitcoin has been the reserve currency of crypto, meaning that when anyone's trading altcoins, when they trade out of altcoins, it's generally back into Bitcoin. You're seeing that happen with Ethereum now and all these DeFi projects that are based on the Ethereum blockchain, on the Ethereum protocol. You're seeing when people position themselves out of these altcoins, of these tokens, what they're doing is going back into Ethereum. You saw a project, Yam, blow up on Friday, and then you saw the rush back into Ethereum. Here you're looking at the 10-year and tracking spot gold over here. And you can see this is really interesting. Why I say it's interesting is that it wasn't so interesting that Warren Buffett invested into gold. What was more interesting to me was that he divested out of a lot of his bank holdings. He really dumped his bank holdings, and you could see. And what I see is yields actually continuing to go down, and as yields fall, you're going to see gold continue to rise. Here's a look at gold after it got smacked down over there. That was on the uptick on yields. Yeah, the first thing that came to my mind when I saw that was, do you really think that the Federal Reserve is going to allow yields to rise without coming in to smash them down? The whole system is dependent on that. They can't afford to have yields rise. Now, I'm not saying there's not going to come a point in time when the Fed loses control. I just don't think that that's this moment in time. And if the Fed loses control, by the way, do you think you're going to want to own gold? I know that I'm going to. And then you could also see silver recovering nicely after it also sold off hard. It sold off hard into support. That's where I hope all of you, and I know most of you were, looking to go ahead and leaning to buy. Always going with the trend. And remember, right, we're never trying to pick tops. We're never trying to pick bottoms. We're looking for that sweet spot where we do a really good job making a living. All right, everyone, I'm going to go enjoy the family. I hope you do as well. I hope you have a beautiful weekend, and I'll talk to you soon.